Hello everyone, today I'm going to teach you how to read market structure in a way that will solve a lot of issues for traders, especially those that are confused and can't read markets because theories are something and reading the real chart is something else. First of all, let's talk about market structure. And in market structure, we almost have two things to worry about. So let's take here black. This is, oh, the opacity is at 50%. Okay, that's why. So let's remove this one and make a newer one with 100% opacity. So this is better. So this is a perfect example, but this is great to explain first the basics. So we have a break. I want a lesser line, and let's change the color to orange. So, oh my god. Okay, so we have higher highs, higher highs, higher highs. So for each high, we broke it. Then for each high, we broke it. And then for each high, we broke it. But this type of breaks are called break of structure, BOS. So it's a break of structure. Great. Now, every time that we have a high that got broken, which is a break of structure, we need to pay attention to the low of that high that got broken. We need to pay attention to the low of that high that got broken. Meaning that once we have a break of structure, we need to look to the low, because that's very important. We don't act on the break of structures. Break of structures are just a way to understand how the price moves. We don't trade on it. We could in a more internal way, but that's for later. It's more complicated. So here we have a break of structure, break of structure, break of structure. Then we check the lows. Okay, that line is, oh my god. Let's remove those lines and let's make some better lines. So we'll do it on with the blue color. Okay, we have this low, then we have this low, which got broken. Let's make it more straight, like this. So in here, we got our break of structure. We checked, we pay attention to the low of the break of structure, and we broke it. That is called a change of character. A change of character is what tells us this is a sign that the trend is going to reverse. It doesn't mean that you need to enter on a short, but it means that you need to pay attention. Either it will go up or down, but you need to pay attention. This is a way to read the market. So in here, and this is, in other ways, this is the head and shoulders. If you look at it, this is the head, this is the head, and this is the shoulders. This is the highest probability setup. The head and shoulders, it's the highest probability setup. There is other setups, obviously, but it doesn't mean that you need to enter here. There is a lot of things that you need to learn. You can't just short in here, but it's a great example. Then in the other side, we are starting to get lower lows and lower highs. So here we are going to change to yellow again, and we have a BOS here, a BOS here, and we are checking the change the highs to pay attention to the change of character. So if price went again higher, then we are going to pay attention to this, and this would be, so once this got higher, so for example from here to here, it could be that way. So let's make it black. Great, and this way. Great. So here, this is a change of character again. So change of character. And in here we have break of structure. Great. So why this is very helpful? This is very helpful because we could have these things, these examples, and you will see them a lot of in charts. Great. This is a good example. Let's make it here. And let's focus on the break of structures. So here we have the break of structure. Great. Then we have another break of structure. Great. Then we have another break of structure. Great. And another one. So in here, this is good. So let's lower this. So here we have the low of the break of structure. Here, until we broke it, we have the lowest price of that break of structure. Then in here, until we broke this one, we wait and we draw our low. In case we didn't have this framework, you would have seen this break of this low and you would have entered here internally. And this will cost you a lot of losses because it could be in many ways like this. So like this, then like this, then like this, then like this, for example. And in this price, you are going to lose a lot. So here is the break of structure, 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 and we are looking at the lows. Low here, break of structure, 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 low here. So in this case, we wouldn't trade on those little bricks in here. For example, this one, for example, this one, for example, this one. All of those would be losses because you are too zoomed in and you got played out easily. So this is why the break of structure and change of characters are very important. So this is a genuine break and those are fake breaks. You would want to only pay attention to the genuine breaks. Here the breaks are, you could have a lot of genuine breaks. It could be, let me delete all of this. So for the genuine breaks, let's make a line. Let's choose the red for breaks. So we have a break with a close. We have a break with a hard close. And we have a break with a wick. So the wick break, meaning we made a low in price, so price went down and pushed under the low. In this case, this would be a wick, for example. This is more aggressive. Then we have the hard close, which is very conservative, meaning we are waiting for the change of character to not be a wick, to not just be a close, which is in between the two, but a hard close, meaning we close below with a whole candle to confirm that the change of character is valid. Me personally, I choose the wick. I think the wick is more, it's more aggressive, but if you know what you are doing, it's very good. The close is also good, the wick is also good, everything is good depending on your risk appetite. Not everyone will have the same risk. So you have the close, the hard close, and the wick. Great. Now, once you have the change of character, then there is your entry, your stop loss, and your take profit. In terms of entry, you don't want to enter at the break. Never enter in breaks. Why is that? Because breaks are always tested again. Price most of the time come back to your entry. Entering in a price which will be revisited again is not a good decision. You want, for example, here to have an entry somewhere in here. It's better because once you have a BOS, price will less likely go back to your area. You will be safe. You could have your break-even trade. You move your stop loss to your entry and ride the move. But if you trade the breaks, which are also an option for higher risk type of traders. So for example, you enter here, price will go to your entry. Maybe you will panic, maybe you will exit. You don't know what your emotions are going to be, but this is a little bit riskier in my opinion. So where should you enter? And I will not answer this question in detail because it will take a lot of time and it's very complicated. So where you should enter? You should enter in what I called area of interest. This is just a name that I created. Could be anything. You could call it area of entry or entry possibilities. I don't know. So what does area of interest mean? Area of interest means that we have areas here, here, here of interest, meaning there is some interest in it. It means there is some interest, there is participation, they mean something, and it's better to short on those areas. If you ask me what those areas could be, which we can see on other videos in more details. So it could be volume profile nodes, it could be footprint clusters, it could be fair value gaps, it could be price action or the block type of candles, candle shape. Then we have start of trend. It's a name I gave it to the candle where the trend started, where the impulse started. So the first candle of that impulse. Why is that? Because that candle specifically is where those market orders and those participation and that aggressivity initiated. So it's very interesting. We have untested levels. That's more, we will see that in more videos. We have VWAP, EMA, and all of those indicators that could help us. There is volume-based entry, meaning you analyze the volume and check each candle. It's close to the footprint clusters. We have internal breakout structure, meaning that in this move, for example, if you go down a time frame, a lower time frame than the one you are actually using, or even in the same time frame, you would have some market structure going on. It could be very short, but this is very important. So that's also, it could be Fibonacci, so levels like 1/2, 1/3, and etc. Or it could be much simpler and be premium and discount. Premium and discount, quickly, means you take this one, you take this place, or even this in here, and you take half of it and you enter in an area here with some existing area of interest, which could be any of those fair value gaps, etc. Great. So now you understand market structure in a more detailed ways. You got ways to read the market. You get ways to enter the market. Your stop loss obviously would be area of interest also above them, meaning you analyze this price move and you check. This is much complicated, and we are going to see that in other videos, of course. So let's just focus on the simple things for now. It's no-nose trader. We don't want a lot of noise for now. So we have the break of structure, we have the change of character, we have ways of identifying the break of the change of character, which are close, hard close, weak, depending on your risk appetite. We've seen possibilities of fake breaks and genuine breaks, why fake breaks are fake and why genuine breaks are genuine. We've seen also that genuine breaks don't mean you are guaranteed to be a reversal. You need to be aware of that. We've seen also the external, which is this, and the internal, which is inside an impulse. Great. So now we are going to go to the chart. So we are going to see this in real price. And I'm going to teach you a trick that is very stupid, very simple, but nobody uses it. I don't know why they do not do that. Okay, and we are here now. So we're going to choose an instrument for now. We have forex, we have indices, we have stocks, gold, commodities. So let's choose crude oil. I love crude oil. Okay, well, we are going to see other instruments, don't worry. The goal is just to see examples, live examples. So we're going to go to the 5 minutes, since a lot of traders like to be in lower time frames, especially those that trade prop firms. And here we have a great example. Okay, so we are going to remove all of our indicators. Those are not meaningful for now. So here we have clearly a break of structure. Great. Oh, sorry. Oh my gosh. Let's start from here. Oh, I didn't select it. God damn it. Okay. Break of, oh my god. Let me redo it. Now it will be straight. Okay, great. So let's change the color. Maybe not, this is not visible enough. Let's do the colors that we used on the whiteboard. Okay. So here we have the break of structure. Great. Then we have another break of structure. Great. Then we have another break of structure. Great. Then we have another break of structure. Like I said, this example for now with the week could be counted depending on what you use. It could be your break means price breaking it, meaning price went over it. It could be a close, it could be a hard close, depending on what you want. For me personally, I go with the wicks. For me, wicks means price went there, and that's enough for me. Okay, so at each break of structure, we're checking the lows. Those would be in blue. So break of structure, the low would be here. Break of structure, the low would be here. Break of structure, the low would be here. Once a low is broken, here, let me put the names. This is break of structure. And the name here, which is change of character. Great. So once we have change of character, which happened here, this is a sign, this is a sign that we could have a reversal. Great. So you enter in an area of interest. Like we said, it could be an order block, it could be volume profile, it could be anything. We can see some examples. It could be internal market structure, which we are seeing here. So price went, let's do it with this one. So let's remove the magnet and let's do it. So up, down, up, up. This is internal market structure. We are going to zoom in it. And we have this area. That was the previous area of interest before we broke it. Here is the BOS here. This is a micro BOS here. Then we have the next BOS and the next BOS, etc. So we broke here, we went over this, and we went down. So if you entered, for example, here, your stop loss would be not here exactly, but a little bit higher to protect yourself, because price could eventually go up. This is a possibility. Then reject it and go down. So you always put it a little bit higher than where you think it should be. So for example, if you enter here, instead of waiting for a break, for example, entering here or entering here, your entry will always be revisited and even go up, and your stop loss will be much higher. Even here, your stop loss would be this size instead of this size. So you always want to enter in a discounted price. You want to enter in the pullback. You don't want to enter at the breakout. So this is it. Let's go and check. Let's see some price which is not as simple. So let's just here break of structure, for example. Break of structure, the low is here. So break of structure, the low is here. Break of structure, the low is here, meaning change of character, which is a break. Price goes and have a pullback while checking a level of interest. In this case, we are going to check the internal market structure, which is up and down, up and down, up and down. The last BOS could be this one, this small one, or this one here. So you would have entered either here, which is very close to enter, or you would have entered here. Your stop loss would be either somewhere here or up, or even at the other one. So you would have your entry here, you have your 2 R's. Obviously, I'm not saying that you base your entries just on market structure. You need other things that we are going to discuss on other videos. So please subscribe and like this video. If you are interested in more videos, please comment more videos, please. Okay, so let's see some examples that it's not working every time. Just look at this. BOS, here, oh, this is a great example. So here, for example, you have another BOS here. This is not really. This is price went up and went to the other change of character. This is clearly a downtrend, even though it failed after, but you would have entered somewhere in here, here, here. If it touched here, you don't enter anymore. This is, you lost your opportunity. So let's just find something that is not so here, for example, we have BOS, we have our break of structure, then you have change of character, pullback, and went up. So you'll probably say why I didn't choose this one, for example. So the trick that I was saying that you need to use is this. You're going, this is not mandatory. This is not important to use. This is just a trick to use if you want. You're going to choose the bars instead of the candles. You'll just let me clarify this. You always want to use the candles so you have more idea of what's happening. But you can turn to bars and make the up bars and the low bars the same color, which here is in black, so you can see it more clearly. You see, it's up, then up and down, then here up and down, up and down, up and down, up and down. You can see the price in a better way. For example, here it's clearly just an impulse. If you go for a candle, you would be seeing a lot of noise. So this could be a great way to read market structure. Why I didn't choose, for example, this one? Because this one is very small. It's not a big impulse, it's very small. You have also ways of, you could also have rules on what an impulse is, on what is a break of structure and what it's not. It could be, for example, that for an impulse to have, for a break of structure to happen, the high, for example, the high need to at least go above the previous break of structure, for example, or at least touch it. So in here, for example, for this one to be considered into a break of structure, we need this high to be higher. So in this case, this is not a break of structure. It would be the low of here. We need to break it to be a break of structure. Did you understand? I hope this was clear. So do you want more examples, or that's it? So for now, we're going to do something else. We can choose anything. So let's go Euro USD, for example. So we can switch. I don't know what price did here. We're going to use the replay button, so I'm not cheating. Let's go up. Okay. We are in the 5 minutes. Look at this. So let's have the magnet on. So let's do it. And here, BOS, change of character would be that. BOS. Then we want to break this. And this would be, oh, sorry. Great. So we are going to play it. We have another BOS. So the line would be here now. Great. This also could be a BOS. And we have this low, which should be the change of character. Okay. Here we have nothing. And, sorry, here we have our break, depending on your risk appetite. Like I said, for me, a week is a break. So here we are going to check the market structure of this impulse. So we have this, and then we have one impulse. This is not, I don't like when it's one impulse, we don't have enough market structure here internally, unless we are going to another time frame, but I like to have some internal market structure here in this impulse, which we don't have, but hopefully we have some. Why I want market structure to be in that impulse, it's for price to have some resistance, some areas of interest which are areas of resistance where there is participation, where there is genuine aggressivity. So when we have a price going up, that aggressivity would be absorbed, so we can go down, or depending. Okay, so here you could have said, okay, we want a fair value gaps, for example, or depending on your if you are going to have the market structure, it would be one. This is the first impulse, then this is the second impulse, then we have the third impulse, which is this one. So in this case, we could use this one, or you could enter here. So you'll have your entry here, your stop loss would be a little bit higher, and you are waiting. So let's check. So entry done, great. So let's see in here. So this is down, which is, so we have the POS here. By the way, I don't know where price will go. This is our change of character in the other side. So then this is too small for me. So here we are going to choose this one, because this is the one after our entry. So we need to break this one. Okay, retest. We have a break, we have a POS now, which means we are going to be break even. That's why I told you to not enter on breakouts, but enter on an area of interest when price pull back. So when you have a break of structure, for example, in this case, you move your stop loss to break even. Do you get it? You move your stop loss to break even, and now you can't lose anymore. That's it. Great. So here there is, where would be your target? So let's just, we have pulled this up. Your target could be the previous change of characters, for example, here or here, or it could be just a fixed number, for example, 1.5. It could be your fixed risk to reward, and you're waiting, and that's it. Great. It could go even here and lower and so on. Do you see? It's very simple. So it could be here, for example. This is the line. It could be here. Let me choose it. It could be here, for example, depending on your risk appetite. Even this stop loss could be somewhere here, above the fair value gap, for example. It depends. Everything depends on what you want and what's more likely to fit your personality. This is the most important thing. It needs to fit your personality and your risk appetite. Or it could be even here. For example, someone with another risk appetite doesn't want here or here, or he wants here, for example. And he doesn't want, for example, to have his stop loss widened and more secure. He wants it above, for example, a fair value gap. And here he targets a 10R. But obviously, he will have a lower win rate. Why? Because price could easily go to his stop loss. So, and he waits a long time to reach here, or maybe it would never reach it. So, for example, here, and he would never reach it. So it depends. And you see exactly a stop loss, and it will go down. Let's see it. Ah, no, it went just up. Okay, so depends on your risk appetite. So choose wisely. Choose what you like. But why here? But even you could use a trend, for example. If it breaks, for example, I wouldn't say this little break is enough to exit. But when you see some impulse candle, you should exit. So for example, this person would have 3 or if he exited here, or he has a fixed 5 hour, for example, he would have exited here. So it depends on your framework. So this is it, guys. I explained market structure. I explained a lot of details inside of it. I basically give you a full course on market structure. Obviously, some markets would be very volatile. You need to, this is very important that I remembered it. You have some, I see a lot of people, for example, trade very speculative instruments. And this could be another video. They trade very speculative instruments which have a lot of volatility and speculation. So it's not as genuine, and it has a lot of algorithmic activity. Something like, for example, Nasdaq. If you take Nasdaq, it's very speculative. It doesn't have genuine participation. So you see, for example, you have here, then very big impulses. So you need to choose wisely what you want to trade. You would have some clean price action here, for example. So it doesn't mean you have always bad, but something like this, for example, it's very dangerous if you don't know what you do. Especially for a beginner, I advise you to trade something with genuine participation. For example, crude oil. Trade crude oil, you could trade gold is a little bit volatile, but it has its structure. For example, BOS, 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 BOS. Then here we have change of character, pullback, and up. You see, it repeats itself. So thank you everyone for watching. I think I did my job. If you want more videos, please comment. And thank you for watching, and see you next time.